Hey everyone, welcome to The Explainer. I am super thrilled you're here today. We're going to dive into a topic that honestly sits at the very heart of business efficiency, SAP payment terms. We're going to completely demystify how companies take a simple, everyday handshake agreement and turn it into this incredibly automated money-saving machine.
So let me ask you something. How exactly do you automate a discount? I mean, just picture for a second the sheer manual pain of calculating due dates, tracking penalty periods, and figuring out the exact discount amount for every single invoice your company processes. If you're doing this by hand or, even in some clunky old spreadsheet, you are literally losing time and money. But the good news? It really doesn't have to be that way.
All right, here's our roadmap for today. 1. The business deal. 2. Transaction OBB8 explained. 3. Setting the baseline date. 4. Configuring discount tiers. And 5. Your summary checklist. Section 1. The business deal. Understanding the why. Okay, before we touch any software, let's picture this. Imagine you're running this massive, bustling office supplies business, right? And you're constantly buying tons of paper from a specific vendor. Now, this vendor wants to get paid faster because, hey, cash flow is king. So they offer you a classic cash discount deal. The premise is super simple. Buy the paper, pay early, and save money automatically. And when you're dealing with millions of dollars in accounts payable, missing just a 2% discount, that's a massive hit to your bottom line. So how do you make absolutely sure you never miss that early payment window across hundreds of invoices? Well, you let the system do the heavy lifting.
Which brings us right to our core definition. In SAP, payment terms act as an automated contract between your company and its business partners, whether that's vendors you buy from or customers you sell to. These rules automatically tell the SAP system exactly when an invoice is due and, crucially, whether a discount applies for paying early. It completely replaces those manual calculations and, those sticky notes plastered all over your monitor.
And what's really cool is how SAP integrates these terms across all your different departments. In accounting, these terms hit your standard financial invoices. Think of your FB60 or FB70 entries, which are basically just your everyday direct postings for vendor and customer bills. Over in purchasing, they drive your purchase orders and materials receipts, known as MIRO. That's essentially the step where you verify the invoice against what was actually delivered. And then in sales, they dictate your standard billing invoices. It's one central configuration, but it has a massive enterprise-wide impact.
Section 2, Transaction OBB8 explained, configuring the rules. All right, so to actually set up these automated rules, we dive straight into SAP transaction code OBB8. Now, I know this interface might look a little dense at first glance. It's definitely filled with a lot of checkboxes and input fields, but it's actually incredibly logical once you break it down. Just think of this as the master control room from your payment terms. This is exactly where you map that real-world paper vendor deal directly into SAP so it can execute the contract perfectly every single time. Totally hands-free. Let's break down the general settings at the top. Think of these as the name tag for your deal. First up, you've got the payment terms field itself. This is a unique 4-character code, like 001, that basically gives your deal its identity in the database. Next is the sales text, which is just a quick 30-character description, acting as a super easy readable reference for any actual human using the system. Then there's the account type. You can set this up for a customer, a vendor, or both, depending entirely on who the rule applies to. And finally, the day limit lets you define the specific date within a month up to which these terms are valid. By filling all this out, you're telling SAP exactly when and where to trigger the specific deal. Moving on to Section 3, setting the baseline date, starting the clock. So, once SAP knows what the deal is called and who it applies to, the very next absolutely crucial step is figuring out when the timer actually begins. The baseline date is, simply put, the countdown clock for the invoice. It's the precise moment SAP begins counting the days for payment and discount eligibility. Listen, if you don't set this baseline date correctly, your entire discount calculation goes out the window. The countdown might start way too late, causing you to pay penalties, or it might start too early, meaning you completely miss out on those hard-earned savings. And here is where you actually set that clock in OBB8. Under the baseline date calculation section, you essentially have two main levers to pull: the fixed day calculation and additional months fields. These two fields dictate exactly how SAP handles the date printed on the vendor's invoice and translates it into a functional, ticking start date for the countdown. Let's tie this back to our paper vendor to make it concrete. Let's say your company only runs payments on the 15th of every month. That's a very common standardized payment run schedule for big enterprises.
Well, you can configure these fields so the system automatically rounds up the clock to that specific date. Setting the fixed date of 15 means SAP anchors the start of its calculation directly to your real-world payment schedule. It perfectly syncs your software with your business reality.
Section 4, Configuring Discount Tiers, the sweetener.
Okay, now we are getting to the absolute best part of negotiating these terms, saving the company money. Down in the bottom section of OBB8, you'll find the Payment Terms Input area. This is the financial incentive right here. This is where you enter the actual discount percentages, telling the system to automatically deduct money from your invoice total if you hit those agreed-upon deadlines.
Let's walk through a real-world, multi-tiered discount example so you can really visualize this. Look at Tier 1. Boom. You get a generous 5% discount for immediate payment. But hey, if you miss that window, no problem at all. Tier 2 kicks in, offering a 2% discount if you pay within 15 days. Finally, if you drag it out past that 15-day mark, the net due hits. That means full payment is required, 0 discount. Vendors staggered these deals to incentivize cash flow as quickly as humanly possible, while still giving you a bit of a break if you just manage to pay on time. By plugging these specific percentages and days into OBB8, SAP automatically enforces this sliding scale for every single invoice from that vendor. It's brilliant.
And finally, Section 5, your summary checklist, 3 core questions.
We've covered a ton of ground today, from the high-level business logic down into the technical weeds. So let's distill this into a really practical toolkit for you. Whenever you are setting up a new term, you just need to ask yourself these 3 core questions. Number 1, who is it for? Always double-check your account type to make sure it applies to the right customer or vendor. Number 2, when does the clock start? Meticulously review your baseline date settings so your timing is completely flawless. And number 3, are there discounts? Clearly define your percentages and day limits so you capture every single penny of potential savings. Which leaves us with one final and honestly pretty provocative question to ponder. How much time and how much money is your business losing right now by not automating your payment terms? If you have manual interventions anywhere in your accounts payable or receivable processes, I guarantee you are leaving money on the table. So take this knowledge, jump into OBB8, and start automating those business deals today. Thanks for hanging out and exploring this with me on The Explainer, and keep learning.